Awesome. So we're going to go ahead and get start recording. Give me a minute so I can. Open up the slide. Have you attended any of the other sessions by any chance, Vicki?
No, actually, I've been interested in attending, and I've always missed the date, and so I penciled it in again for today. So,
oh goodness, okay.
yeah.
All right. So today, because every lesson is, a little bit different. So today we are going to be discussing different lending options. So like I mentioned, every lesson talks about different things about identity theft, different lending practices, budgeting, it's a series. So today, this one happens to be on lending practices. So we're going to go over it. And since it's you and me, but we are being recorded, please feel free to ask a question. I can't see my chat very well, so just interrupt me, okay?
Okay.
Feel free. So some of the questions, like for example, with vehicles, a lot of people may prefer to lease, some people prefer to buy. So we're going to be exploring some of the pros and cons, and they both have their positives and negative aspects of leasing or buying. So you may ask yourself, like, what should I get? Should I get a new car versus a used car? You're going to hear arguments of both sides, right? Should I lease? Should I buy? How much can I afford? Should I trade in your old car? That's a big, thing to consider. Some people want to sell it on the outside because they may get more money from it versus when you trade in. Although right now, with the way things are with the market, they are paying a lot for trade-ins. Do you have an idea why they're paying a lot for trade-ins?
No, I have no idea.
No idea. So right now, a lot of the stuff that's going on, there's a shortage of inventory on vehicles, new and used. So right now, you are getting a lot for your trade-ins. With that said, because there is a shortage of new and used vehicles, the price of vehicles have gone up substantially. So yes, you're getting a lot for your trade-in, but you're also being charged a lot more for a car that you're going to purchase. So, that
It balances it out.
It balances it out. Exactly. Like they say, the house never loses, right? So the other thing, car loans versus a car lease, some people like to lease because they want to trade in, every 2 years, and they don't want to be upside down. Upside down means you owe more on your car than what it's worth, right? So they don't want to be, owing on the car and then have to transfer what they owe into the new car. So some people prefer to lease a vehicle, okay? The only thing is that if there's certain damages to the vehicle, that you're leasing, you may be charged for them. There's also restrictions on the miles. Have you ever leased a vehicle in the past?
No, I haven't. And I think that's what prevents me from doing it. It's because of the mileage. I've known some people who've leased and they end up paying a lot because they never, I guess you just never know how, what situations come up, and then you end up using more mileage than you thought you would.
Correct.
So I think that's what keeps me from leasing a car. Yeah.
So if you live in a small town and you don't put in a lot of miles on your vehicle and you love to have a new, shrinky car every 2 years, and your payments tend to be lower when you're leasing. Why? Because you're basically not going to owe that vehicle unless at the end of the lease you decide to purchase it. Then you're gonna finance whatever you decide. Not recommended even by the dealers. I mean, they're not going to tell you that they don't recommend it, but it's not highly recommended that you purchase the car you leased. But a lot of the time, your payment is going to be, so let's say, for example, I'm going to throw, you want Lexus 350 RX. Okay. And so if you bought it, your payment will probably be a little bit higher than if you leased it. You get, I guess, more car for your money per se, but it's technically never going to be yours. with that said, there's some people who just trade in cars every 2 to 3 years. So if you're that type of person, maybe it is something that would benefit you. Now, if you live in a smaller town where you know you don't put, or maybe you just run errands, you're going to be fine. But if you're running around a lot and putting in a lot of miles, it's going to be counterproductive to your pocketbook
Right.
because of that. So, something to consider. During the pandemic, people saved a lot on the miles because they maybe were working from home. But once we get back to normal, you may be running around more than you were last year.
Right.
Sometimes your car insurance may be a little bit higher on a lease than on a purchase. That's also something to consider. So it's just, what is your lifestyle like? Um, Obviously, if you purchase a car, you'll see the end in sight as far as paying for that vehicle if you plan to keep it long term. And some people do. Some people keep their cars 10, 15 years. I mean, I know people like that. So something to consider. And remember, if you do trade in a vehicle, it is highly likely that you'll get less for it in the trade-in than when you sell it on the outside, like a private sale.
Yeah.
So financing a car, of course, the car is the collateral for your loan. So you don't pay the vehicle, they're going to repo it, right? We know that. The title indicates who owns the vehicle. So the title may have whoever financed, the bank that financed your vehicle, until it's a free and clear title once you've paid it off. you know when considering to get a car loan, it's important that you consider the cost of the vehicle, but also the interest that you're being charged and any other fees that come along with that financing. Okay, so it's always important to shop for the best deal. Don't just go to the dealership and take their word that that's the best you're going to get as far as financing. Shop
Mhm.
around. It's okay
Okay.
to do it. Maybe if you have your own bank or a credit union, find out. Now, if they can beat it, wonderful. You know, then take it. Sometimes they'll offer 0% interest. Obviously you can't beat zero, right? But also be careful that they're not jacking up the price of the car to make up for it. Okay, so those are a lot of things to consider. And even for a vehicle, go to, let's say you like a particular type of vehicle, make and model, shop at different dealerships so you can see which dealership is going to offer you the best price, and the best product. I always say, don't be afraid to walk out on them, okay? And they do get upset if you, and I say they, the salespeople,
Uh, yeah.
sometimes, they'll spend hours with you and you're trying to make the deal happen because you want a car. But sometimes if you don't like what you hear, say, you know what, I don't like what you're offering and I'm leaving. And don't ever be afraid to do that, even if they get upset. If they really want your business, they'll call you back and they'll give you what you want. They
Yeah.
really will. Maybe right now we don't have a lot of bargaining chips because of the situation that there's a shortage, right? But in normal times, we really do have more control, if you will. You know, where can you obtain a car loan? Of course, your banks, your credit unions, finance companies, or the car dealership. So always look for the lowest interest rate and the best price. Okay. If you tend to buy used, make sure that if you have a mechanic to take a look at it, don't take their word for it. I know sometimes they have like they're inspected and they have some type of warranty that we're going to talk a little bit about, but just to be on the safe side, make sure that you get it looked at, and also ask for a report on the vehicle's history. Has it ever been in a wreck? How many owners has it had? Things like that. And was it in other states? What states were they in? Sometimes there are states where there's a lot of snow or a lot of, flooding, things like that. You want to make sure that the car, especially in smaller dealerships, that tend to buy older cars um, from different auction blocks. So be careful with that.
Okay.
You know, when dealers offer lower interest rates, sometimes you have to be careful. The best deal may require larger down payment or shorter loans. Like sometimes some dealerships will do this. They'll be like, I'll give you a zero interest, but you have to get a loan for 3 years only. That's really hard because then your payment's going to be kind of high just
Mhm.
because the life of the loan is so short. So be careful. There's no contingencies that are going to hurt you. And now you're not going to be able to pay that monthly payment. Of course, you're going to need excellent credit history. Most of the time to get a 0% interest, you have to be at the highest tier. When it means like your credit score has to be really high, you know. And then make sure that there's no additional fees for having that 0% interest, because sometimes they may charge you to bring down those points. So those are always like, take your time, read the fine print, and ask questions. And if you don't understand what they're explaining to you, ask them to explain it slower or in a different way so you can understand it. Like, don't be afraid, because it is a big investment. Any vehicle is a big investment. It's thousands of dollars. um, Ask about price of low rate financing, advantages of paying with cash using your own financing, cash or using your own financing. So obviously, what do you think if you pay cash? What's the benefit of paying cash? What do you think?
Of course, you save money on the interest
Exactly.
of,
Exactly.
yeah,
So sometimes people will make the argument that when you buy brand new, you're paying more for a vehicle that literally the minute you walk out, that you drive off with it, it depreciates. And they're right. They are correct. It will depreciate a good 30% easily, just by driving off. The thing is, sometimes those vehicles are more expensive and it's difficult to pay for them cash, right?
yeah,
Now, when you buy a used vehicle, obviously you're probably going to get like maybe a less expensive car with maybe even more bells and whistles. The only thing to watch out for is that when the financing, if you don't have cash to pay for those used vehicles, the financing on a used vehicle is higher than a financing on a new vehicle.
oh, okay,
So if I buy, I'm just going to say Maxima, a Nissan Maxima. Most of the time, if I buy with my credit, okay, with my credit, if I buy a brand new Maxima, I'll probably get 0% interest versus if I buy a Maxima that was pre-owned, even if it's a year old or whatever, even if it looks really new, but it had a previous owner, then I may get a 3 or 4% interest rate, maybe even higher. So used vehicles tend to have a higher interest rate than a brand new vehicle. So
oh,
if
okay,
you're going to finance, then you may want to look at the numbers and say, well, I'm going to end up paying about the same because the interest rate is higher on the used one, even though the price is less. So yeah, you're paying less for the vehicle, but more on the interest. And
yeah,
on the new vehicle, the price of the car is higher, but I can get a 0%. So, and do the math and say, okay, which one, and you'll know which one is more beneficial in the long run, which one's going to have the warranty, because it's new, things like that. So I'm not saying to go either or. I'm just saying look at those type of numbers because the interest is different on new versus used.
oh, okay. Well,
Yeah,
that's good to know. I didn't know that, so
yeah,
that's good to know.
absolutely. Um, are you going to require a down payment? Well, not you, but the dealership. Are they going to say, well, you to get this interest, you're going to need to give us $2,000 down, aside from the tax, title, and license. So how much money do you have to have on hand, you know, to pay to be able to drive out with that car? You got to ask yourself that because sometimes we don't have that much cash on hand.
Yeah,
We are used to financing things. Um, what are the limits on the lengths of the loan? And are there any balloon payments if due at the end of the loan? So most of the time there aren't, but you want to look at all those different type of products. And by products, we mean like what you're lending me, is it just every month for a set amount of years, let's say 4 years, and it's always going to look the same, interest won't change, the amount of payments won't change until I pay off this vehicle? Good. That's what you want. You don't want any balloon payments at the end because then you're going to be caught
okay,
off guard. But those are rare, but they could happen. So any promotions like trade-in allowances or limit, ask about limits on special offers, and what do they mean by like the dealer's invoice price. Make sure that you ask all those questions and see what the dealership is offering you and that it be legitimate. um excuse me, like I said, sometimes they'll give you a lot for your vehicle, but then they'll just sell you the car for a little more than, to make up the difference, because they're not going to lose. On auto service contracts, it is a promise to perform or pay for certain repairs or services. Um, Ask questions before buying an auto service contract. So if they offer you like an extended warranty, that type of thing, make sure you know what it covers. Most vehicles, they have the warranty already. And later on, as it starts expiring, like then you can buy one if you wish to, like a warranty that goes on longer. You don't have to buy it right off the back. Um, Sometimes there's contracts like, for example, oh, we'll service your car, we'll do the oil change, tire rotations, whatever, we'll check it, 5-point inspections, we'll do that. If you buy this contract, we'll include it into the price of the vehicle, and you get to bring it in, and you don't have to worry about going to a mechanic or somewhere else to get the oil changed or the tires rotated or whatever the case. If it's something that you feel would benefit you because you don't want to worry about taking your car somewhere where you don't trust them, then purchase it if that's what you wish. No, and remember this, if you ever buy one of these contracts, let's say your life of the loan, let's say you're like, I'm going to finance my car, new or used, it doesn't matter. I'm going to finance my car for 4 years. But after 3 years, you're like, you know what? I'm going to trade it in or I'm going to sell it because I want a different car. Whatever contract you had, because you didn't last those 4 years, they need to give you back prorated amount of what you paid for that contract. So you'll have a check due to you. Okay. Always remember that. Like, you're going to have money due to you. The other thing, Vicky, is have you ever heard of gap insurance?
Yes, I have. And it came in, we had a vehicle, we had just bought a vehicle. It was back in 12. Bought a vehicle. Unfortunately, we were in an accident. And I don't think we had the vehicle for longer than a year. And so good thing we had the gap insurance, and that it just was able to cover everything. And we were relieved at that point.
Yeah, absolutely. I always recommend, we always buy new just because we grew up with older cars and we know what struggle it was. So now that we're able to afford it, we buy new. But we always buy the gap insurance because, yeah, when you drive off the lot, it's going to depreciate, right? So you want to make sure to cover that amount, of the value of the vehicle and how much you owe on it. So most definitely, I'm glad you do purchase it. So know if for any reason you were to get rid of the car because you sold it or, traded it in for a different one or whatever the case, and you still owed on it, because what you paid for that gap insurance is kind of divided up by the months that you are supposed to pay for the vehicle, but you got rid of it beforehand, they'll cut you a check for a prorated amount of the cost of that gap insurance.
Okay.
Okay. So, like we had a truck that had a gap insurance and had a contract for the services because we like to take the vehicle to the dealership to be serviced for everything. So when we actually sold our vehicle through the outside, maybe like 2.5 years into having it. So we sold the vehicle on the outside to, it was a private sale. And the new buyer, he got his own bank to finance it. So the truck was paid off. So we got 2 checks back, one for the gap, the prorated amount for the gap insurance, and a prorated amount for that contract, that the service contract.
Service. Oh, okay.
Yeah. So, I had forgotten about it. I'll be really honest. I had forgotten about those things because it had been 2.5 years. Like I totally forgot. It was my husband's truck. So we're like, oh, okay, cool. And that's what it was.
Oh, okay.
Yeah, just remember that. Your warranty for used cars, look for the buyer's guide on the sticker to indicate whether the vehicle is either sold as is, or it may be some of them, if they're new enough, they may still have some of the warranties, the original warranties of the maker, whether it be Nissan or GMC or whatever. But if it says as is, definitely get that vehicle checked out because that's what it means. Now, granted, there is an implied warranty where it's supposed to turn on and function, right? I mean, they're not going to sell you something that doesn't work and you drove it home and then it stopped working. But when it says as is, be very, very careful. And I can tell you 9 out of 10 times, if you see a used car in a dealership, it's going to say as is. So make sure that those vehicles are thoroughly inspected by somebody you trust. Okay.
And I have a question.
Mhm.
Like those vehicles, say that I'm interested in buying a used vehicle and the vehicle's on the lot. Can we bring our own mechanic to the lot? Do the dealership allows that, or how does?
Oh, 9 out of 10 times you can ask to take the car to your mechanic.
Oh, oh, really? Oh, okay.
I would. And I mean, we have done that. It's like, you know what? I'm interested in this car. You're going to test drive it, right? And
Mhm.
and then you're going to
Okay,
say, I want my mechanic to take a look at it, and
okay,
9 out of 10 times there is no reason why they wouldn't. I mean, granted, by this time they've already approved your credit. They know you're good for it. You know what I mean?
okay.
And they make sure that you have car insurance, stuff like that. They got your driver's license. You're not gonna do something crazy with a
Yeah,
vehicle.
take off.
Right.
Yeah.
But a
Okay,
lot of people say, I want my mechanic to that is like probably, I'm sure, the most common thing that a used car salesman is gonna hear. I want my mechanic to take a look at it.
okay. Well, that's good to know.
Yeah,
I mean,
absolutely.
we've, my husband and I, thankfully we have two new vehicles, but
Mhm,
our daughter, she's starting to learn how to drive. So she's 19.
mhm.
So we're looking into maybe buying her a used car. So this is very helpful
Yeah,
because, about, having the mechanic look at it. I
yeah.
didn't know how that works. I mean, I don't know if the dealer allows somebody to come into um,
Probably not.
their dealership, but that's good to know that we can drive it off and take it to the
Yeah,
mechanic.
yeah.
Okay, that's good.
And if they don't, let me tell you, Vicky, if they don't, say, okay, then we're gonna go somewhere else because
Yeah.
there is
That
absolutely
should throw a red flag that
right.
why are you? Yeah, yeah,
Why do you have a problem with my mechanic taking a look at the car? And obviously you're not gonna let my mechanic in here and he's not gonna have his equipment there.
yeah, that's
Like
true. Yeah,
to run
what he really needs. Yeah.
yeah, absolutely. So it's like, no, also there's like different, like the Carfax or whatever, get the details on the vehicle. And if you want, you can run your own report. You go online and to see what history that vehicle has. I mean, they may give you one there. They may give you one. Like I know a lot of dealerships, the bigger ones do give you the history of the vehicle. But if you're like, I don't know. Or maybe you're buying from somebody privately, you know? Maybe you're
Okay.
buying from a private, like when we sold our truck, it was a private sale. So we got the potential buyer. We got a report from the history. We had been the only owners. It had never been in a wreck. I mean, it was a really good truck. But we got the history just to tell them, look, this is the history of the vehicle, just so you can be at ease. And we told them, take it. I mean, drive it around and take it to be checked out by whomever you want, and I mean,
Oh,
it
okay.
worked out. We got more money for the truck because the trade-in was going to be horrible. It was going to be
Yeah.
horrible. Like we were not going to be able to cover the balance on the truck if we traded it in. So, and the guy got a really good truck and he paid less than what he would have paid if he bought it used at the dealership because they're going to jack up the prices.
Oh, yeah. Yeah.
I mean, so it just worked out for both. Um, but we did have the for sale sticker for a while. It did
Oh,
take a little
okay.
bit. It did. But the guy, we saw him at HEB and he's like, wait a minute, and it worked out. So don't be afraid also to buy from private. I'm not saying to do that or not to go to dealerships, but don't be afraid. Um, because some people know that if they trade in, it's just they're gonna not get enough.
Pay more. Yeah.
So they just put the for sale sign on their vehicles or they'll put it on Craigslist or whatever. We sold a Jeep like that too. And the gentleman paid us cash for the Jeep, 17,000 cash.
Hmm.
I mean,
Okay.
but again, we gave him a history of the vehicle. We allowed him to take him to his mechanic, whatever. He's like, I love it. And so I guess don't be afraid to do your research on both sides, private
Yeah.
sales and dealership, especially if you're thinking of getting for your daughter. Yeah, absolutely. Any other questions? Because we're going to move into the homes.
No, no, no other
Okay.
questions.
Okay, awesome. All right. So we're going to talk a little bit about home equity loans. So remember, the value of your home minus the amount you owe on your mortgage is the equity you have. Sometimes we can have equities on our vehicle, right? Like let's say your vehicle is worth 10,000, in Blue Book, for example, the Blue Book value, but you only owe 2,000. That's, you have equity there. That's equity. You have it on your home, you have it on your car, potentially. Okay. So basically, when you get a home equity loan, they're not going to lend you everything that the home is worth. They'll only lend you up to 80%, okay, of the equity on your home. They want some wiggle room there. Okay. They're not going to lend you, if your house is worth 200,000, they're not going to lend you 200,000. They're going to lend you less. They're only going to
Okay.
lend you 80% of that. So have you ever gotten a home equity loan?
No, I have not.
Mm-mm. If you ever do, you know, right now, again, with the houses, it's also another thing that has gone up. I don't know if you've seen it even on TV. Cars on average went up about 30%. They're being sold that much more expensive. Houses, it's ridiculous. There is no negotiation right now. It's definitely a seller's market, just so you know. Right now, it's not always like that, but right now it is a seller's market. People are getting multiple offers on their home higher than their asking price. So if you want to sell your house for, you're like, you know what, based on, the neighborhood, whatever, the house is worth 200,000, and they do an appraisal and it's 200, and it's right. Let's say it's 200,000. The buyers are coming in offering 200,000, 210,000, 230,000. I mean, they're offering thousands of dollars above asking price.
Um,
Does that make any sense? Because it doesn't to me, but because I wouldn't pay more than what something's worth. But with that said, some people want to buy a home. So they're paying more. If the house does not appraise, when they do the appraisal, let's say the house appraises at 200,000, but the buyer said, "Oh, I'll give you 220,000," but it's only worth 200,000. Then the buyer has to come up with the difference in cash. They better have a good savings account.
oh,
But
okay.
that is exactly what's happening right now. People will have offers on the table, multiple offers on the table, all of them above asking price. It's crazy. All of them about, so they're even asking buyers to write a letter of why they want to buy this home.
Oh my gosh. Wow.
I swear. I'm not kidding. This is not a joke. I saw it once in a movie and I thought it was really weird because it's an older movie. And I thought, interesting. Didn't didn't mean anything to me. I just thought it was in a movie. My daughter just put in an offer on a house, and after 5 different offers that they had placed, offering about 5,000 above asking, obviously it wasn't enough because they never got picked. They finally got selected based on the letter they wrote.
Oh my gosh. Wow.
Based on the letter they wrote, but they had to offer above asking price. And they had to write a heartfelt letter of why they wanted that particular house. And when the seller read the different letters, they picked my daughters and my son-in-laws. So now they're buying a house, but it's crazy. It's right now, it, you know, it's, I mean, you can get a lot of money for a home right now, but the prices are really high if you're trying to buy. So keep that in mind.
Okay.
Yeah. So types of home equity loans, one-time loan for a lump sum. So sometimes you can take out money. Typically it's a fixed interest rate. Now know that a home equity loan interest rate tends to be higher than a regular mortgage rate. So like right now, my rate on my house, because we just bought in July, we moved to San Antonio about 2 years ago, and a year ago actually, we bought a home, and we're at 2.75 interest rate. Okay. If I chose to get a home equity loan right now, the interest would probably go up about to 4%. It would be a little bit higher. Those interest rates tend to be a little bit higher. But some people take it out for different reasons. Sometimes they want to fix stuff in the home, Sometimes they want to pay off debt, kind of like in a lump sum for a fairly decent interest rate, things like that. So just know that that loan starts kind of like you're resetting the clock. So if you've already been paying on the house 15 years, be careful with refinancing and then doing it for 30, because now you're kind of resetting,
Yeah.
paying that all over again. Okay, some people may get a line of credit out and use their house as collateral, and they get a loan out maybe to start a business, to pay college tuitions, whatever. So those are the type of loans you can get. Either get a lump sum in cash, or they can get a line of credit. And that line of credit means now you have your mortgage, but now you have this other loan to pay. So,
Okay.
yeah. So borrowing against your home, what are the advantages of taking out home equity loan? Well, again, sometimes, we live in a home 10, 15 years and it needs a little fixing up and we don't have the cash. You can utilize this money. What's the danger against borrowing of against your home? That if you don't pay, you could lose your home.
Yeah.
Yeah. So be very, very careful that you do that. So, of course, lower interest rate when you borrow against your home than a regular. If you went straight to your bank and try to borrow money, they may want to lend it to you for 10%, and a refinance may be at 4%, for example, so a lot lower. Some of the interest may be tax deductible. Of course, the danger is losing your home or owing more than what your home is worth. Especially if you take out that line of credit, because you still owe your home and then they give you a big line of credit. So now you owe. And both of those loans are contingent. If you don't pay them, you could lose your house. So very careful. Is a line of credit right for you? Well, can you afford it? The increase in your monthly payments. So that's something to consider. Are you comfortable with fluctuating monthly mortgage payments? Sometimes it may not be a fixed interest rate on that particular line of credit. And will you be investing your home equity in other assets of long-term value? So maybe you plan to use that money that you took out to open up a business and it pays off. Or maybe you're going to say, you know what, I'm going to buy a little fixer-upper and I'm going to flip it and make money off of it. Then maybe it is worth it, right? But if you're just going to blow it and go on vacations and stuff like that, or maybe some people pay off all their debt, like their credit cards, but then a year later, they're all inundated with credit card debt all over again, right?
Yeah.
So then it wasn't worth it. So those are the things to consider. So right to rescind or right to cancel. You have 3 days to reconsider a signed home equity loan agreement and cancel the loan without penalty when you use your primary home as a collateral. So let's say you're like, yeah, I want this home equity loan because the roof, we need a new roof and the insurance won't cover it for whatever reason, or it flooded and the insurance doesn't cover flood, whatever the case. And you're like, yes, I need the home equity loan. And you sign the documents. And then all of a sudden, your rich uncle says, you know what? No. They're going to charge you interest. No. I'll lend you the money interest free and pay me as you can. I promise. Yes, I'm going to do you that favor. Well, you have 3 days to say, never mind. Even though I already signed, never mind. Cancel the loan. Okay. So that's really good to have. Kind of buyer's remorse, if you will. So what are 4 C's to keep in mind? Capacity. This is what lenders take into consideration, okay? The capacity. Your present and future ability to meet your payment obligations. That's why they ask us, hey, do you have a job and how long have you been at your job, right? They ask us, like, is this person bouncing from job to job, or they've been there and they're, for 5, 10 years, whatever the case may be. Capital, the value of your assets and your net worth. They'll ask us, do we have any, other properties that we own? They'll ask us things like that. Character, how you have paid your bills and debts in the past. If you're constantly paying late, they're going to be like, you know what? They may not, if they don't honor those bill commitments or payment commitments, they may not honor ours. And the other is collateral, property or assets offered to secure the loan. Say, you know what? Maybe my credit's not that good, but I'll use my car as a collateral, my house as a collateral. So those are the 4 C's that lenders look at. Like my daughter, she has no collateral, no assets. They're young. They owe everything they have. And capital, like their net worth is, I'm sure in the negatives because she's got student loans. But what they have good credit because their capacity, they're young, they're employed, and they've been gainfully employed even throughout the pandemic. So they have capacity and they have character. They pay their bills on time. So C number 1 and C number 3, they're super strong, even though C number 2 and C number 4 are not so good. And they were able to get a good interest rate. Not as good as ours, as mine and my husband, but fairly well, like in the threes. So those are the things, and you can share with your daughter. Those are the things she needs to take care of, especially if
Okay.
she's young. Her capacity to pay and her character go a long way right now when they're young. Okay.
Okay.
So be careful with predatory mortgage lending practices. So just look at excessive fees, abusive repayment penalties. So let me give you an example. I will give you an example of excessive fees. So we build a new home. My husband and I, the one we bought is a new construction. Okay. So the builder said, if you go with our preferred lenders, and they gave us a list of like 4 lenders, we'll give you $5,000 towards your closing cost. Okay. Fair enough. When they were giving us, when their preferred lender were giving us, their fees, their interest rate and everything, how the loan was going to work, I was like, well, I don't like the interest rate, and I don't like kind of like the product they're giving me. So I went with my old faithful lender that I've used from back home, and she offered me a way better product. Like those $5,000 were not worth it to me compared to what my old lender was offering me. So I told the builder, I don't want to use your lender. I'm not going to use your lender. Thank you. Thanks, but no thanks. You should have seen the crazy response I got. He was livid. And I'm like, what do you care who I finance through, right? You shouldn't care who I finance through. Like, you're going to get your money. He's like, well, I'm not going to give you the 5,000. I'm like, okay. Like, I think the money should be irrelevant unless you have a vested interest. Well, once we looked at the numbers, half of the money was going to come from the lender, from the 5,000. Half of it was going to come from the lender, their preferred lender, and the other half was going to come from the builder. Well, that lender was going to supposedly give us 2,500, right? Half of it. But when I looked at all her fees compared to my old lender, the one that I ended up using, she was making it up in other fees, these crazy excessive fees. That's where she made up her 2,500. I was like, yeah. I'm like, you're not giving me anything. You're charging it to me somewhere else where it's disguised as we always, these crazy fees. She was just increasing the percentages, like
So you're
of the
gonna,
option
you were
fee.
gonna end up paying for it
Oh
anyway.
yeah. Absolutely. So I told, my builder, get angry and get over it because I'm not using your lender. Of course, then his lender was like, no, I'll go down to that 2%. I'm like, no, you should have gone down to the 2% from the very beginning, right? I mean, you should have given me your best offer from the very beginning. This isn't a game, so yeah, they were all upset. It's irrelevant I'm the buyer, I'm the customer.
Yeah.
I'm going to use my lender that I trust because obviously I can't trust you to give me your best product, from the get go. You wanted to see how much you can get away with, right? So always be careful with that. Anyway, excessive fees.
Okay.
She was billing me for those 2,500 somewhere else. Watch out with abusive repayment penalties. Make sure that there's no prepayment penalty, that it's okay to pay in advance and they're not gonna, gig you for that. You would think they shouldn't, but some will. They want that loan to last so they can charge you that interest, right? So make sure there's no prepayment penalty fees. Make sure that there's no kickbacks to brokers. I think there was a kickback for that's builder, between that builder and that lender that he wanted us to use. I think there was, but I can't prove it.
Yeah.
Loan flipping, of course, that usually happens. They'll sell your note. Just, be careful with that and any new fees. Make sure that they don't put in any unnecessary products like warranties or things like that. Asset-based lending, of course, that's going to be like, well, we're going to lend you contingent upon that property you own in another state, so we can use it as collateral. Be careful. So just be really careful that you're not steered. Also, like we were steered to that preferred lender. I didn't like that. And I didn't like that they got angry because I didn't use it. To me, the proper response would have been like, okay, finance through whomever you want, as long as I get my money, right? That to me, that would have been normal. And the fact that they got so upset really bothered me. So just be careful that you're not steered and pressured into using a product or going with a lender that you're not comfortable with. Absolutely. Of course, subprime lending, if you've ever heard of it, it involves extending credit to borrowers with poor credit histories. So, of course, you're going to get higher interest rates. They're going to charge you excessive fees. So, be very careful because some lending institutions will take advantage of people that have low interest rates. Always shop around. Okay. If you need to resolve complaints, this particular you can go to the Federal Deposit Insurance Corporation, which is the FDIC. We hear FDIC all the time. You state the problem, include the pertinent information, send copies of documents that may help explain your problem, and keep your original documents. Sign and date your letters, of course. So you can Google the FDIC. And let me see if I can find it here because I thought maybe I accidentally deleted it. But usually you can remember, and this is for not for your builder, but the FDIC is for your lending institutions, right? So yeah, if you Google it, and I don't know if, no, you're not going to be able to see it. Let me put it, let's see if I can put it on the chat. Here it is. I'm going to put the number on the chat.
Okay.
And that's really to report it's at Ask FDIC. Or 877 275 3342. Yeah, if you suspect of some shady banking practices, you can contact them to, and they'll guide you as to how to resolve it. So they regulate lending institutions. All right. Do you have any questions?
No, I don't. I'm just glad I did learn some new information out today, and I appreciate it.
No problem. If you want a copy of this slideshow, let me see. You can put do you have an email? If you have an email,
Yes, I do.
Awesome. If you wanna, I can send you a PDF format. That way you can kind of refer back. And I always like to go through this. I have a 26-year-old today. Today's her birthday. A
Okay.
a 21-year-old and 17-year-old, and I love to teach them this kind of stuff because they're at that time where they make impulsive buys and they have the money because they have the jobs and stuff. So I'm like, okay, before you do anything, let me see. So yeah, if you want to put your email on the chat, and I can send you this PDF format so you can share it. Awesome. Okay, then I will do that for you. And so expect it from my email, M.A. Aguirre, the one that's on top. That's going to be from me. Okay.
Oh, okay.
Awesome. Well, have a great week.
Okay.
All
All right. Well, I appreciate it. Thank you.
Bye-bye.
Bye.